Welcome to The Big Break Show, a podcast where we discuss short-term rentals, entrepreneurship, life, mindset, and everything in between. Here are your hosts, Rafa and Jesse Vasquez.
What's up, everybody? Welcome to The Big Break Show, episode numero 5. I'm here with my co-host, Jesse, and man, do we have a show for you guys today. What's up, Jesse? How you doing today, brother?
What's up, party people? What's up, Rafa? I appreciate it, man. Yeah, I'm super stoked, dude. We got Onaje Barnes himself. He's a full-time buy and hold real estate investor who uses the BRRR strategy, the BRRRR strategy, and creative financing. This dude is fantastic. He is used to be a former economics. What is that called?
He's still in economics, but I guess he did like consumer data for economics or something.
Yes, yeah. And I love that because he gives a lot of direction on where we're going in the future as far as where the money is heading and the best ways to buy in real estate to make sure that we do that in a smart and intelligent way. So I'm super pumped for you guys to learn, hear all of his conversations, hear how he grew up and how adversity has helped him grow in his business. So I'm pumped. I hope you guys enjoy the show.
Yeah, dude. You know what? Super stoked about it because going to the fact that he's got that economics background, he looks at things in a very different perspective, and I love it, dude. I talk to this dude quite often, and we're becoming kind of good friends. But there's something that he touched on here where I think we relate with him so well because he's been talking about how he's been working since he was like 14 and like the adversity part and everything, man. I hope you guys really enjoy this show. Without further ado, Onaje Barnes. So thanks for coming on, man.
Well, I thank you guys for inviting me. Number one, it's always an honor to get invited on the podcast. And, I got a lot of love for you guys and what y'all are trying to do. So anything that I can do to kind of help and support, I'm going to do that. So make sure you guys subscribe to the YouTube channel and not just watch the show.
Cool. Yeah. So, Onaje, tell us what you do, man, who you are, what you do.
Hey.
I want to know where you came from, what city you were born in, what time you were born, all that good stuff.
So I tell people that I'm a long-term buy and hold real estate investor. I start with that because my goal is I'm all about generational wealth. I want to not just take care of myself and my immediate family, but my kids and my grandkids and things like that. So, I do that with buying property and keeping it and holding it long-term. Holding can be however you hold it, right? The ability to just pay it off, make sure the bills are paid in cash flow, right? So that could be long-term rental, short-term rental, etc. But ultimately, I'm from Houston, Texas. I'm from 3rd Ward, Houston, Texas. I'm very passionate about the neighborhood I grew up in. I was a 3rd child of a single mother. She had 4 children, and I was the 3rd child. We didn't make a whole lot of money growing up. Specifically, you have your moments in life that you remember. I specifically remember filling out my own FAFSA form for college, which a lot of people do every year. And what stuck out to me was that was the moment that I learned how much my mom made that year, because you kind of got to fill this stuff out. And I remember this the most amount of money. Like I felt we were the best off as we were growing up my senior year, but she only made $12,000 for the year, not a month. So
wow.
Yeah, the year. And so that was kind of my background, whether that's, and so again, we all know $12,000 don't add up a whole lot. Now, granted, that was 20 years ago, but it still didn't add up then. So, but I went on to the graduate salutatorian in my high school class, started out at chemical engineering at the University of Texas at Austin, hook 'em horns, I'm all about my Longhorns. But one of my big changes in life was, realizing that engineering wasn't necessarily for me. I wanted to graduate on time. It was more of a 5-year degree. Money was short, so I didn't have that 5th year money. I didn't know where it was going to come from, and switched out to my love of my life now, which is economics. So switched to economics. That's where I ended up graduating in. And but economics, I learned a lot from economics from a theory perspective, but it wasn't all that practical knowledge that I got into. From there, I went into the corporate America world. As my actual trade in life outside of real estate is I've been a back end buyer and or retailer. So that's really what my life has been about from a professional perspective, is that I'm a retailer. And what does that mean? So I started off as a buyer, assistant buyer, planner for a company called Foley's Department Stores, which is now a division of Macy's. So think Macy's department stores. So I was a buyer for them, and they had some mergers, and we'll go into that later at some point because this is a big point of my life. But they had a merger, 25,000 people got laid off. I didn't, but I still chose to move on at the time, and I got on with JCPenney as a planner. And again, what my background is, literally what we try to do is get the right product at the right time at the right place for you, the consumer. So I'm big on consumer. So my background is really about consumer analytics. That's kind of where I'm big on. If you go to my LinkedIn profile, it'll say data analyst and all that kind of stuff. So I use data to really inform me from an investment perspective. We'll get into that a little bit later as well. But yeah, that's kind of been my background. And then from JCPenney, I went on to work for the largest shoe company in the world. And I'm still with them today. That would be Nike. So I've done a few roles there, been a business planner, been a sales rep, a partner executive. So basically, though, my job is to really stay informed as far as the consumer so we can provide the best products for them at any given time.
Wow, dude.
Yeah, that's awesome, man.
But how does that get the real estate, right? You're like, whoa.
I'm like, okay, well, it's funny because, I talk to you quite often. Like, we talk maybe like once every week or something, right? And we talk on Clubhouse whenever we're like, lately we haven't been on it, but we talk on Clubhouse all the time. And I knew a little bit about your backstory, but I know, like, we mainly know you as like the long-term real estate guy.
Right? Yeah. So, when you get into it, so that background, that story really tells people how and why I got to wherever. So, I faced a massive corporate merger, right? You're talking about two $30 billion companies. So I was originally working for a company called Macy's. You guys are out in California. Maybe you know Rob May back in the day or something like that. Robinson's May. I'm not sure if you familiar with that back in the day. So that was the parent company that I was working for. And again, they merged with Macy's. These are two $30 billion companies. So that's a massive deal. And at 25, I came out of the University of Texas. Again, you guys kind of got that immigrant background. What did your parents teach you? Go to work hard, go to school, get a job, right? And so that's what I was taught, right? And that's we didn't have a lot of money growing up, but my mom was an educator, and all of my family, pretty much are educators now. So my sister, my brother's a principal. So we're big on education. So that's what we did, right? Go get educated. And I was just happy coming out like, if I could make 40 grand a year, like I was good with that. But I had this economics background. I always loved economics. So I always continued to read and study certain types of concepts. And over time, you just realize, like, particularly when you go through a layoff, right? There's nothing that really stresses you out when you're going through a layoff. And when you're doing that, you start to really understand some concepts like, oh, crap. Like, this job isn't here forever. Or maybe this company's job is actually not to make me rich or even well off. Like, all you are here to do is do a job, right? And they're paying you for a service that you're providing for them, right? Sometimes people get caught up with the mentality like, oh, well, I'm supposed to make this. I'm supposed to make that. No, they have no obligation, right, to get you rich. It's just on you to make sure that you're financially healthy. So when I went through my first layoff at 25, and like I said, I've been through a bunch of layoffs and I've always survived, always knock on wood, survive. But sooner or later, I know the Pied Piper's going to call me, right? And so the question is, when you got a wife and you got two kids at home, what are you going to do? Are you going to sit back and wait, right, for that shoe to drop and then you cry to the world and say, oh, woe is me? Or are you going to do something about it? And so for me, early on at 25, 26, it started with just getting educated about money, about wealth, about inflation, about real estate, things of that nature. And what that's done is basically what that did for me is say, okay, I need some supplemental passive income, which I think is what this show is really about, right? Like it's about how do you get that supplemental passive income? Maybe everybody wants to make $1 million a month, or maybe they just need a couple grand a month, right? But how do you get that supplemental passive income coming in to where your floor in life is raised? I'm not really big about looking to the ceiling, right? Because we can always chase somebody richer, right? But how do you raise your floor in life to where at minimum, me and my family is going to be safe or okay or well off or can pay the bills and things of that nature? And so that's really what kind of got me going along that path, is just understanding, oh, well, if I lose my job, can I find another job? And how long will it take? I mean, I went through that circle, that rabbit hole, and then I realized, no, that's not the way. The way is being able to have something supplemental or extra, or to either equal to your salary or surpass your salary, right? And then you actually become more free in life to do and say what you want to do, work where you want to work, and actually maybe enjoy your job more, because you don't have that pressure of always having to maybe do some of the things in corporate America we don't like to do, right? And all that type of stuff. And you're more free about your life and how you go about your job. So I'm all about financial freedom.
Dude, so there's a few things you said, man. I loved everything you're saying, because part of the show as well, aside from the income, is a mindset type of thing. And even in corporate world, in the corporate side of things, you have a very different mindset than most people out there, right? From the first part where you said about the job, where, listen, I just have a job. It's my responsibility to do my job based on what the job is. Not it's the company's job or the company's responsibility to make me rich. No, they just hired me to do something, right? And most people are like, well, I'm here doing this for them. They owe me all this, they owe me that. And you're like, no, it's the opposite way around. And I love that part of it. And then the second thing that you said about where, you know, to you, it was more about how you're well off to a point where you and your family are doing good, so that you're not always chasing that new ceiling or that richer person, or you want to get to the next level where it's never enough, right? Like those two things, man. How did that come about? Like that mindset part of things, to where you realize, look, I just want to make enough to where I'm good, where my kids are good, not where.
That was a big one. That right there. If you kind of, anybody who hears me speak, I always kind of go back to this concept. And you know, the African American community, and maybe you've heard this phrase. You know, we got this phrase called "keeping up with the Joneses," right? And you know, who's the Joneses, right? It's the that's the phantom person that we're always chasing, right? But if you're doing that, you're always running. You're always chasing something else, and that becomes very abstract. And if abstract goals are not real good goals, right? We want very specific, measurable, smart goals, right? And if you're chasing something that's not real, because you're always moving the pendulum, you're always moving the finishing line, right? Because you're chasing people, or you're chasing things that you think is cool, because you don't have an actual insight, right? That can be problematic. Now, I'm all about always growing and growing myself, right? But that's different than, I can't be looking at Rafa and Jesse, say, well, Rafa and Jesse doing this, I need to be whatever. Then I go look at somebody else and, well, I got to do them and I got to do that. And ultimately for me, I came to that conclusion, and that goes back to my story. You know, when you are in high school and your family makes 12 grand a year, think about all the things that you probably wasn't able to participate in, right?
Yeah.
Think about all the things that maybe you weren't able to have: clothes, cars, whatever, can't go on dates or whatever. And I've been working since I was like 14. You know, we was picking up odd jobs forever. But for me, growing up in poverty always sticks with me, because whether that's today or yesterday, right, it shaped who I am. Because for me, you have to realize early on that I had to realize early on, in order for me to feel good self-esteem wise in my mind, I can't be sitting around here looking at the rich kid next to me and say, well, why can't I be him? Right? I'm looking more at him. I have to look at me and say, well, how can I be the best me at my starting point? And I think that's where a lot of people get in trouble, is that they try to equate their starting point with someone else's starting point. I can't compare myself to Puff Daddy's kid, right? Who might have started off as someone else, right? There's plenty of people that start off in certain spots. Like, you know, we listen to Clubhouse, and there's people that say, oh, well, I'm a third generation real estate investor. I can't compare to that person. Right. And I shouldn't. Right now, I can learn from them, learn maybe some concepts that they were taught that I wasn't taught, right? But I definitely can't compare well, why are they here and I'm not here? No, it's your race. Yeah. See, that's where we have to remember that it's our race in life, right? It's not somebody else's race. You can't run somebody else's race. You have to develop your own race to get to wherever you're getting at. And you can't say, well, Naja, you own X amount of doors. How do I get there? Whatever. Like, okay, let's just start with one. Where's your race at? Right. Let's get there. And I'm big about that. And that started because, again, when you're growing up in a certain type of poverty, that affects you mentally. Right. And in order to stay mentally healthy, you have to kind of block out a lot of noise. And I'm big about blocking out the noise around me. I want to soak in the knowledge, but don't take in the noise. If that makes sense.
Yeah. You know, you brought something up. So, you know, growing up in poverty, Did your family talk about money or wealth or real estate or anything like that at all? Or did you just,
Nah,
was that
man.
like, wasn't it- so like you guys didn't have dinner at the table and talk about finances or anything like
You
that?
know, I grew up in the generation that was all about education will get you out of it, right? And I
Gotcha.
think maybe you kind of that maybe relates to some other, it relates to a lot of people, right? Like and economically, if you study economics, education is a component. It's a major component to dig your way out of of poverty and things of that nature. So that's what we were taught. We were taught work hard, right?
Mhm.
Study at school, get your straight A's, learn this, learn that. So my mom was big about education, but she didn't have financial education, right? So that was the tool for me, was having the value of picking up a book. So that was a big one for her. Like, hey, we did book reports every summer outside of school, right? And so just understand having the biggest value was, don't be afraid to pick up a book and read something or educate yourself or listen to a podcast or listen to a YouTube video or watch a YouTube video for that matter. Being able to educate yourself, for me, it's actually quite stronger than, quote unquote, learning how to make money, right? Because if you can learn how to learn, right, that's actually real power.
So actually, you're saying something awesome. And because right now, the big controversy with certain people is like, oh, you don't need to go to college. You need to go out and hustle and grind and do your own business, right? You're saying learn how to learn.
Yeah.
Right.
And
Go to college so you learn how to.
teach you that. College can teach you that.
Yeah.
Right. College teaches discipline. Right. College, you got deadlines. You got it teaches autonomy. Right. So on one hand, first of all, let me be real clear about something. I am very, very pro education. Right.
Okay.
Now I am pro education, but education does not equate to systems and processes and society. Right. So am I pro college? Yes, because it's a form of education. But I'm not pro college in lieu of education. Two different things. Right. So I'm all about learning how to learn. College can teach you that. But what college doesn't necessarily teach you is that practical application. And I think that's where the confusion is, right? Do you want to learn from someone who has practical application? Like, you go to business school, a lot of these business professors are book theory investors. Like, they're not people who started businesses, right? Like, not necessarily on average, right? So you have to, there's a healthy debate to say, okay, who am I really learning from? Am I learning from someone that's going to teach me a bunch of theory, or am I learning from practical application? I personally believe in both. Because Rafa, we've had plenty of conversations. I talk a lot of theory-based stuff, right? But that helps me in practical application.
There's and correct me if I'm wrong here, but there's an age-old saying where it's like, don't become a millionaire for the $1 million. Become the millionaire for the person that you become to get there, right? Yeah. Same thing with the college situation. Am I wrong when I say, don't necessarily go to college for that one specific career that you're going for, but more for what college will make you become after you're out?
Absolutely. Like that. Like, if I tell you right now, the things that I learned from college and the things that I got from college, like, and to be clear, I would never give up my experience at University of Texas. I bleed Longhorn, right?
Yeah.
But it's because of the friends that I made, the connections that I made, the fraternity that I pledged, the wife that I met. But if I go down the list, the actual education of what I learned in economics is actually quite small. I would argue that I learned more about economics outside of the 4 years than I did there.
Yeah, man, I love that. That's awesome. Cool, dude. Hey, listen, I got to ask you, though, going back into not changing the subject out of where we're going, because we're having a conversation, but I want to ask you about your real estate investing journey so far, because I know what you have so far in terms of your investments. I've seen some of your investments, which are awesome, right? Can you talk a little bit about that and how what it took you to get to even just that first property? Like, talking about basically, let's shift into the supplemental passive income side of your part.
I had well, first of all, I love you guys because y'all journey is so much different than mine. And I love it because it's a way for me to learn in the future, right? So I'm always forever learning on how I got there. So I started with a very kind of old school mentality. I'm not very old myself, but the strategy that I took was kind of old school because it just worked. I mean, that's what's in all the books, right? So I kind of did that journey. So literally, I would say, so it started with that layoff, right? And at the time, that same year in that layoff, so we got laid off, or the company was being defunct, right? So I had to, they offered me another job in another state. But long story short, that was the journey. I got engaged to my wife that time. So like I'm big male, like, oh yeah, I'm 25, I'm gonna get engaged and be a husband. What does that mean, right? And you know, I gotta take care and provide for my family or whatever, and all that good stuff. And I realized like, oh wow, I'm actually not safe, right? I can't quote unquote be this picture, whatever. And again, my definition of what a husband and father should be was different then than what it is now. But at the end of the day, my journey started with just the idea of understanding that I had to come to that realization, because I went into that first company, Foley's, like, oh, I'm gonna work for them for 30 years. That was how I was raised. I was coming off that generation of saying, hey, work hard, study hard, work hard for this company, and they're going to hire you for 30 years. So when that bubble got bursted, I was so fortunate, right? It was a great bubble for, and I say I'm fortunate because I was 25 at the time.
But you didn't think like that at the time, right, Onaje? You
No.
weren't thinking like, you weren't thinking at that moment like, oh crap, I'm laid off now, or people are being laid off. And I think, you know, going in here, not to cut you off, but adversity and, you know, kind of builds people in the way that
Absolutely.
they not necessarily don't look at. And I think that, you know, maybe talk about that a little bit. How
adversity brings strength. I mean, for me, adversity is rocket jet fuel. I mean, that is jet fuel. Somebody tell me I can't do something, thank you for adding some gas to my tank.
Yeah.
Right? You
Yes.
know, if I see something that a goal that, you know, maybe some people don't think I can accomplish, I mean, that I'm just filling up the tank. So for me, adversity is absolute rocket jet fuel. If you don't have adversity in life, then that means likely you don't have any types of failures. And if you don't have any types of failures, then what are you really learning? How can you learn? Right? How can we grow? So for me, a lot of things go back to education. So I view adversity as a form of education, right? And that's going to make me stronger in life in whatever I'm doing. So I'm very big about that.
yeah. And that also goes back to mindset too, because some people can be like, oh shit, I just got fired. I'm going to crawl in a little hole and I'm going to complain about it. And I'm going to, you know, the world hates me. Nobody likes me. My company can't even keep me here. Or you're just like, this is it. I'm going to do something else. I'm going to prove myself. I'm going to be uncomfortable right now. I know it. People don't like being uncomfortable. That's like,
No, people
people
like
don't.
the same. They want to do the same thing every day, right? But what do they say? If you do the same thing every day, how can you expect different results? You can't. And you know, it's talked about that layoffs, and over the last couple of years, you know, a lot of people have been laid off, and that's affected. You know, I've got some sad stories I won't necessarily go into, but a lot of people went to some dark places in behind these layoffs because they all of their eggs was in one basket,
Mm-hmm.
right? And if you put all your eggs in one basket, and this basket ain't all that strong, you know, you could be in a bad place. And that's where I really like where you guys are doing your show. That's what I'm about, is showing people different baskets in life, right? Creating different streams of income, right? And ultimately, to get back to Rafa's question, for me, it literally started with, how can, you know, and I've always been frugal, right? Your first journey in life is probably frugality, right? Like when you get your investment journey or whatever, you start with your budgets. Let me start budgeting, let me start penny pinching, let me start doing that, right? And that was my first level of journey of financial acumen. But the next level is, okay, I got a certain amount of savings, so how do I start making more money? Well, we can go down a rabbit hole of get a better job, get a promotion, blah, 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 scratch up the corporate ladder, whatever. But as we most know, most of us should know at this point, that's slow. That is slow. So literally, it started with me understanding real estate. We started with our first property. I actually live in my very first property to this day.
Nice.
So we started in February, will be 15 years of us in our investment journey. And it started with education. So I learned how to, one, acquire property, like how and what was the best debt to do that, how to get in with a zero down. So literally, it started with our first property. We knew, I had read enough books. I read the Cash Flow Quadrant, the Rich Dad Poor Dad, Millionaire Next Door, all those books, and literally started with us just saying, okay, we understand the basics of investing. We knew nothing, but we understand the concept of buy a ugly home in a good neighborhood, and you might have some equity, right? Like that right there, right? You start with that, and that's literally what we did on our home. We use a NACA NACA NACA.com for anybody who's interested. And that has a connection with the FHA 203K loan, which is essentially a loan that you can put so I was able to get zero down. And this only works for first-time buyers and not for investment property people, so disclaimer. But long story short, we were able to buy that property with zero down, and the bank gave us $35,000 to rehab this property, the one that's still sitting in today. And literally, we bought it it was foreclosure crisis, so it was listed for 180. We got it offered for 135, put another 30 grand into it, all from the bank, right? And then I got an appraisal about 6 months later for 240 grand.
Wow.
Yeah. And literally, this was our first property. And then somebody told me about the cash out refi. And I literally was able to get a supplemental HELOC on the loan. And we was able to cash out about 40 grand. And that was our first deal, was our first property that we're still living in today. So, and then obviously took that 40 grand and leveled up from there. And I'll go into that.
Did you, there you go with the whistle. So Onaje, did somebody, okay, you just said somebody told you about the cash out refi. Did you have somebody like a mentor guiding you along through this, or how did that come about?
So lucky enough, you know, I'm big about, I'm a people person, I talk or whatever. So in my fraternity, I had a mentor within my fraternity, similar background with me, but he had came out, he was about 5-6 years older than me. So when I was coming up on graduation, he was always ahead of me. And he was a real estate broker in the Austin area. And he was the first person that I knew who had a multifamily. So he had a fourplex at like 26 or something. Like, I don't even know how old he was, but he probably was 24 when I have to ask him how old he was. But so I was able to like see him doing it. And I was like, oh, that's cool. That's okay. But I was still focused on this big corporate job I'm going to get coming out of college. Right. And when all that stuff hit me, that catalyst I told you about, the engagement plus layoff, plus we actually end up moving cities and relocating from Houston to Dallas. So all that happened in like a 4-month span. My mind was like, what is going on? Right. Yeah. Am I on the right path? And he basically was the one that put me on the cash flow quadrant book. And then from there, it really got my brain going to say, okay, what's available? Now I'm adding in my economics background and I'm not a CPA or an accountant, but I've got a lot of those type of skills in my repertoire. And so that really led me down to understanding financing and debt, right? Which, Rafa, we've talked a lot about. I'm big about understanding financing and debt because that's gonna help. That's where the money at. We can't talk about real estate investing. We don't know how to get money.
Right. So Onaje, that actually leads me to my question, because we've talked quite a bit about this and you going into it now, the creative financing part of things. I want to ask you about that because we've had some good conversations about how you just brought up a great way that you got your first property. That's very creative, right? And I know that you've gotten, am I allowed to say, like, can I talk about your complexes? Cool.
Yeah.
So I know you got like your complex that you have now that you're converting into a short-term rental, which I'm super excited, by the way, about. But I know you did some really great creative financing stuff, and you've helped me through seeing different perspectives of how people can finance specific properties. Can you touch a little bit about that and some strategies that people can take and apply?
Yeah. So high level, right? When you're buying real estate, it's going to cost some money, right? Let's say 200 grand, right? It's going to cost 200 grand. Our goal, once you change your mindset to become a consumer to an investor, right? Then our goal essentially is to get the highest return on investment on our capital as possible, right? And typically that's going to happen with leverage. So again, basic concept of real estate 101, you need to understand how leverage works, right? So leverage is the idea of using money or using OPM, using other people's money to buy property, right? And so that leads us down to path of how do I buy property with as least money down as possible, right? And assuming on the back end you have a cash flow strategy to pay this bill, right? Because we don't want people buying property that's underwater and don't cash flow. But if the property, if your exit strategy leads to a cash flow in a good way that you're comfortable with, then the goal should absolutely be how to acquire that property as cheap as possible from a down payment perspective and a interest perspective in my mind. So you talk about creative finance. Again, I'm sure you guys will have more experts on it. They'll talk about subject to financing. And that's kind of creative 101, right? Subject to is literally saying, hey, I'm going to buy a property. Jesse has a property and it has a loan on it. And I'm going to buy that property from Jesse subject to the existing loan. All that means is I'm taking over Jesse's payments, right? And I'm now responsible for this property. That's one kind of basic creative finance. Another basic creative finance is what they call seller financing, right? Same situation. I go to Jesse. Typically in a seller financing, maybe Jesse owns the property free and clear, right? And in this case, he might own it free and clear. And I say, Jesse, hey, it would be great to, I'm sure you might want $200,000 in hard cash or whatever, but have you considered that the tax implications for that? Are you ready to prepare those taxes? I'm just like, man, no, I made so much money this year on my short-term rentals. I don't need no more tax debt, right? So I say, Jesse, well, how about, you seller finance this deal, you become the bank for me, and I make a monthly payment to you, right? And then I make that monthly payment, and then obviously, and then my cash flow strategy is an arbitrage between the two. We like the word arbitrage, right? So you're arbitraging the debt that Jesse's giving me, my monthly payment, with my exit strategy of cash flow, which could be short-term rental, long-term rental, whatever your strategy is. So those are creative ways. Some of the creative ways that I know me and you have talked about is, so I think a lot of people lump those two things as like creative finance 101. I look at creative finance from the perspective of, I never want, so they, you hear those gurus and they'll talk about creative finance from that perspective. You don't need the bank. Don't worry about getting no loans. The bank is bad. The bank is bad, this, that, and the other. I'm like, okay, hold on. Because I learned in economics class that the United States Treasury Department has more money than anybody in the world, which is like true. We know this.
Yeah.
Right? So why would I exclude that from my money, right? And if we understand how money works, the Treasury Department is who funds banks, right? So anytime a loan is created that is backed by a government product, that money's technically invented out of thin air from the Treasury Department. Like
FDIC, right?
Yeah, FDIC insurance and all that good stuff or whatever. Not to get deep into that, but long story short, I want people to use that, right? So they say, hey, put 80% down. The bank says, Rafa, you're approved for the loan, but you got to put, we'll give you 80%, but you got to put 20% down. I'm going to take the 80%, right? And I think naturally most people say, well, I don't have the 20% down. I need to go somewhere else. Well, maybe that 80% is still at a 2.5 interest rate as a good fixed rate 30-year mortgage. That 80%, that's good debt. So your real problem is, how do you find that 20, right? Yeah. And I think a lot of us assume that we have to just find that 20 from the cash from our job or the cash that we're making somewhere else. You can find it that way, but I like to stack strategies, right? And so back in the day, before the financial crisis, they had a tool called an 80-20 loan. I don't know if you remember that, Jesse, from back in the day or whatever.
Yeah.
So the 80-20 loan doesn't exist anymore, but that doesn't mean that you can't create your own 80-20 loan. Okay, so this is some game for the people, right? How do you create your own 80-20 loan? Just go find the 20%. So you can go do seller financing to find the 20%. And so Jesse, let me ask you a question. If in that scenario of that $200,000 house that you're selling me, is it easier for me to sell you on financing 20% or the whole 100%? So if I said, hey, Jesse, I'll bring 160 cash to you, but can you finance 40,000? Is that a better conversation?
Maybe. Yeah.
Potentially, right? Potentially. So because I'm asking you to put up less money. But if Jesse finances 40,000 and I get 160 from the bank, how much money did I come up with?
Right.
Zero. I didn't know that was a thing.
Oh, that's a big thing. It's big in commercial. It's very big in commercial. And it's very big when you buy businesses. So let's say if you were buying like a restaurant or a car wash or something like that, that's very common practice. Like, but people don't know. But I'm like, well, why can't we do that over here?
Yep.
Right. So I'm big about doing things like that. And then obviously, if you have other businesses, you can go get personal lines of credit. You can go get business credit. You can go get some things of that nature to get other lines of credit to maybe supplement those down payments. So those are some creative ways that I like to kind of get into it because I want to add, my whole deal is, how big is my toolbox of skills?
So let me ask you something really quick in regards to this 80-20 thing. So the bank finances 80% long-term, 30 years. And then let's say, for example, a line of credit for the first 20%. How does that look in the bank size? Because now you have two different payments you got to pay. You got to pay the line of credit 20% back, and you also got to pay that.
There's some. So let me what I broke down to you, you have to be intentional if you're going to take this process. So the bank has very specific rules. I'm not going to break it all down, but I'll hint it for you guys. Here's a hint on how you work that scenario. So number one, when you get a loan, they're going to ask for a certain amount of bank statements, typically 2 to 3 months of bank statements, right? So that's what they're going to ask for. And they're going to go through those bank statements. They're going to go through every line item. Let's be clear. They're going to go through every line item, and you need to have a question for it. So if they see a large sum of money come into your bank account within the last 2 to 3 months, they're going to ask you where that money's come from, because they want to be able to track that money for this scenario, right? They want to be able to track this money. So if you have a large sum of money and you say, well, I got it from this line of credit, they're going to look at you funny to your question. So what does that mean? You need to be intentional in planning your business or planning your acquisition strategy. So maybe you put the money in before 3 months. That makes sense.
Think ahead. Yep.
So, yeah. So that's the game there. And there's nothing illegal about what I'm saying, because when they pull your credit, they're going to see that payment.
Mm-hmm.
But I've talked to enough bankers to know that, guess what? They rather see $100,000 in cash with a corresponding payment, right, than no payment and no cash. Does that make sense?
Right.
And it goes down to also your debt to income ratio based on that payment, right? They got to make sure that you're able to clear it as well. Absolutely.
Now all that's going to add up, right? Now all that's going to add up, and that's why so when we get into it, I'm a BRRRR strategy guy, right? And this is the quintessential BRRRR strategy, right? This is what it does, right? You want to make sure that you have cash flowing assets behind that debt. I'm not big about just go get debt to get debt, right? If you ain't cash flowing it, then you got a problem,
right?
Ultimately, you're going to have a problem. So if you got, if you use one property to buy another property, I mean, that's essentially what I've done over my 15 years. One property buys the second property buys the third property, right? Our personal home bought our first investment property. Our first investment property went out and bought 2 other properties. Our personal home has went out and bought 3 or 4 other properties over the years, right? And we build that way, right? We use these lines of credit, or we use cash out refinances to go use it for the down payments and construction costs of our future properties. So therefore, I have more freedom. I have more independence. I've only used a hard money loan one time. I've only used it one time in 15 years. And I have no intentions of using it unless I really need it. And if I really need it, maybe I need to reevaluate what I got going on. And that's no hate on hard money loans. No hate on it.
Yeah, some people are so anti hard money loans, and some are just like, oh, we use it all the time. That's what we have it for.
And I'm good with both. Yeah.
Right. Yeah. It's a lot. So you basically BRRRR'd all your properties. That's what you cash out, refi
my way all the way up. Yeah.
Got you.
I mean, there's a couple properties that I'll give you guys. I don't know if y'all are here for some stories or whatever, but I've got a 21 unit complex, and I like to tell this story because it's a really great BRRRR strategy story. So this was maybe 2013. That same good friend of mine. So we talk about relationships. That same good friend of mine, that older frat brother that kind of pushed me into the game. He at 2013, he was pretty big real estate broker in the Houston area. So he knew a lot of people, had a lot of listings. So in that 12 and 13, we still wasn't back booming economy. So you could still find a lot of good deals. So he had a lady whose husband had passed away in his church, and they had like 20 something properties in the same neighborhood. And he passed away, and they were older, and he was hand managing. Like, when I'm telling you they were in the same neighborhood, like 12 of the properties were literally in the same square block to where he would walk to collect rent. Like, that's what he did for like 20 years, which is kind of crazy, but it was awesome. So long story short, she didn't want to take on the properties anymore. She wanted to sell them off. Her kids wasn't at a place to take the properties themselves. So she's like, hey, Jerome, you're big time. Can you, list these properties for me? And he was like, cool. Well, are you willing to let people in? She's like, no, I don't want to disturb my tenants. I don't want to do this. You can't get in the property. So he's like, who's going to buy a property that you can't get into? I will. So, we randomly were talking. He was telling me about it. I said, hey, send me the deals. I didn't have a whole lot of money at all. Number one. Number two, I actually didn't know how to really acquire property at the level that I know now either. Right. I just kind of had some basics, but we also had to move fast because she was trying to move quick. Right. This is kind of the whole direct to seller 101. So literally, we offered on 4 properties. She ended up accepting an offer on two of the properties, and we had to move fast. So her acceptance was like, "Oh, you're gonna close in a week." The price that we landed on, you guys gonna hate me for this. I bought those properties for $16,500 each, and I gave my friend a $5,000 commission as a wholesale fee, even though he was a broker. So I was all in for 42 grand. I bought two good, solid brick homes, 3-bedroom, 1.5 baths each. They were across the street from each other, like literally across the street. Very similar addresses, whatnot. I did not have $42,000 sitting in my bank account. I had $42,000 in stock. I may have had 50 grand in stock total, which is kind of our savings cookie at the time. So literally I talked to my wife and I said, "Hey, babe, I'm about to liquidate all this stock. This is kind of the majority of our, capital, because we were tied up in other deals." And she was like, "You think it's a good deal?" And I was like, "Yeah." She's like, "Go for it." Right. Which is, hey, always get your woman that will support you, man.
Nice. Got it.
But yeah, so we bought that deal for $42,000 cash. They both had tenants in there, in there already, both cash flowing at $800 a month. Not a gain of money, but again, think about $1,600 a month off a $42,000 investment. I mean, that's good any day you and twice on Saturdays. Those properties today, because I still own them, because I don't like selling real estate. They're both the rents are around 13. I don't think one is $13.50, the other one is $13.95. They're on long-term rents. But more importantly, I bought them cash. Did I let that money sit there? That's the deal with Burr. It's about return on equity. We talk a lot about return on investment, but not a lot about return on equity. So a couple years later, maybe 4 years ago, I did a cash out refinance. I got $140,000 valuation on both of those properties. I was able to pull out about 200 grand. Okay, so that alone is a good investment, right? Like 42 to 200 or whatever, was able to pull out 200. That alone was a great investment, right?
In the span of what, 5 years too, right?
Yeah, it wasn't that long. And Beyonce in one of her songs, she would say, "Oh, I want a guy that can flip money 3 ways or whatever." So I'm about to show you how I flip this money like 3 or 4 ways. So we then took that 200, and that was my down payment on a $1.2 million apartment complex that I got for 21 units, also going direct to seller. And I got that property at $53,000 a door. Right now, that was almost 3 years ago, 2.5 years ago, I bought that. And right now I'm doing a cash out refinance right now. And the bank the appraisal came back at 2.1 mil. So you just add all this up. But long story short, I've got close to $1 million in equity I got more than $1 million in equity on that deal, off an initial investment of $42,000.
Wow, dude.
That is awesome, man.
And they're all cash flowing right now. And of course, I talked to you, Rafa, a lot to figure out a way to see if we can cash flow even better by doing some short-term rentals there.
Dude, I got that. That was an awesome story.
A little bit long, but I love that that's a quintessential Bird deal or over time.
Onaje, do you think that timing is critical in that essence? Like right now we're at all-time highs, right? With pricing. And you were able to get a deal at that point. So like somebody listening now, it's like, hey, I want to go do what Onaje did. We're in a different economic standpoint than we were, even 2 years ago. Everything's kind of completely changed.
Absolutely.
So can you break that down on that?
Yeah, let's talk about that. I can't do that deal. You got lucky. Look, what is luck, right? Luck is about timing and preparation, right? Timing and preparation is how you get luck. And so the question is, are you prepared for when the time comes? So y'all want some game on how to get some cheap properties right now in this moment?
Drop it.
Yes. Okay, so what do we know that's happening in the world? So Rafa, y'all know I study economics. I'm all about economics all the time. So I'm big about that because I like to anticipate what's going to occur, which is going to make me a better investment. So I know when to strike. I know I can be prepared for those moments. So we're in the moment right now where there's been a lot of forbearances. A lot of people, the government said you didn't have to pay your bills or whatever, but a lot of people signed up for forbearances on their mortgages. Well, most of those people actually probably didn't know what a forbearance is. And if you're in the student loan space, if you got student loans, you probably know what a forbearance is, right? And that's not a forgiveness. That's not a deferral. So a lot of these workout plans, a lot of homeowners they were doing forbearances and not deferrals. A deferral taxed the payment on at the end of the loan. A forbearance is a balloon payment, right? So let's say you didn't pay your mortgage for 12 months because you had a forbearance. Well, on month 13, you owe 12 grand plus probably 13 grand for the future payment. That is happening all over America right now. And there's probably in excess of 1 million homes that are in that situation. Okay. So why do I bring this up? My man,
How do we find them?
How do we find them? So go get your
Where are they at?
Where they at? So go get your pre-foreclosure list. Okay. And go do the wholesale game, right? Go pick up the phone, go cold call or whatever. Go see if you can go help some people out.
Where do we get a list at?
You can go to PropStream. You can go to your local realtor. You can go to the courthouse, old school it. There's a whole lot of ways to pull lists to go to direct to seller when you purchase.
Zillow even shows that now. It'll say like pre-foreclosure.
Absolutely.
I've noticed that.
And so the game is to skip trace. That's what they call skip tracing, when you actually go find the actual owner's real name and see if you can find their cell phone or email or whatever. And you go do marketing campaign. That's pretty much wholesaling 101, right? This is a wholesaling strategy. But you can go, but maybe you don't want to be a wholesaler. You just want to get 1 or 2 good deals. That's fine. Right? So you go out here and you go contact. So basically, as real estate investors, we should always be problem solvers, right? Like as short-term rental operators, you guys are solving problems, right? For me, if I'm going direct to seller, I'm trying to solve a problem and help them get out of the situation. And there's absolutely a lot of people who have been kicking the can. Well, we also know at the end of this year, all of these forbearances are like they're not going to extend them. So sooner or later, I don't think we're going to have a foreclosure crisis because the market is so strong, but that could be a way for you to go get a deal in this market today, right?
And so
go ahead.
How would that look? Like you call them and you go, hey, like we know there's a forbearance coming. How can we help you pay for that?
I mean, you got to get your communication skills on point, right? and you got to be able to maybe, have those conversations. Hey, I'm Rafa and we buy homes in, these zip codes and we're looking to acquire some more property before the end of the year, et cetera, et cetera. Do you think that you might be interested in selling your home? Oh yeah, we might be thinking about it. Now you already know that they in real trouble, right? Now I'm not a fan of like making somebody feel bad. I like to kind of offer a solution. But I also go into these conversations with as much information that I have. That's kind of a leverage conversation one-on-one. I don't give up my leverage unless they give it up first, if that makes sense. So I won't go in and say, oh, I pulled your name off a foreclosure list. You better sell your house now or you're going to lose your wife. Like, you're going
to be on the streets
down, right?
But that's kind of how you can approach it. And again, the stronger your list is and the more volume you can do. And, people hire VAs to do that and all that kind of stuff. So you can hire VAs, or if you ain't got no VAs, you can make the calls yourself. But the more calls you make on the best list, you're likely to get a certain percentage of a hit. So if a good campaign, you could do direct mail, you could do phone calls. There's a whole lot of way you could do carrot websites where the website itself is your advertising on Google, because that's a great way if somebody's in trouble, they actually might go to Google and Google, hey, how do I get out of foreclosure? And then your website could be the first one come up. There's a whole lot of ways to kind of get into that. That's like a 3-hour podcast in itself, but that's a great way to get a good deal in this market.
Yeah, you said something, Onaje, that, if you can solve people's problems, no matter what it is you're doing, if you can do that specific thing, you look at Amazon, these big companies, Tesla, they're solving these large scale problems. But if you can solve problems for people, you'll have a successful large business. And we all know there's problems, that's just part of any business. So if you're able to do something like that, and with real estate, we have that opportunity. I always talk about sales being so important. You did sales too. So, when you're talking to somebody on the phone about a foreclosure, it all goes back to sales. It's that conversation. It's that you're solving a problem, and it goes back to that. So I always, with my kids, I always talk about, it's really important to learn and understand people, and sales is really important in that, to have that in your background, as long as you learn it somewhere. And that could even be like a waitress learning how to get a better tip, or just communication with people. So I love that you say that, because again, solving problems is that's how you build a brand. That's how you build a business. And you're able to do that. You're going to grow substantially.
You're hitting on something really important as well that I try to coach people on, is that you might be in a job or in a position or a business that you don't like right now, right? And you're watching this podcast to get some game to move on. Don't discount everything that you're learning on that job. Grab some skills somewhere, right? To your point, I've been in sales for a long time. I'm also been in the consumer business, right? What that teaches me, what I've been able to extract and move to real estate is, one, like you said, sales. But two, if you kind of think about it, real estate is a people-based business. This is a people business, right? More than anything. So for me, I've had the good fortune of my companies that I've worked for to understand consumer trends and how they think. Now, in one company, I'm obviously trying to sell shoes and understanding the concept of consumers from a shoe perspective. But if you understand consumers, right, then how do you equate that to your real estate? And I think that's important too. Understanding who your target avatar is that we talk about, right? Or your target consumer base, and then how to sell to them effectively. I've been in sales for a long time, and the best salesman 30 years ago was the guy who could sell ice to an Eskimo. You ever heard that phrase? Oh, that guy's so cool, he can sell ice to an Eskimo.
Yeah,
that's horrible. Why would you sell? Why would you sell ice to an Eskimo? They don't need no ice, y'all. Right? What do they need? They need a blanket. They need a match.
Yeah.
Right. So let's go solve problems, even if the person don't know what their problem is.
I love that, man.
Exactly. And you got to uncover the problems, because most of the time people don't even know what their problems are. And that's like, when you're effective in sales, that's your whole, like, you start thinking like that, like a consumer, and those problems, and there they are. But you're absolutely right. When you go back, like, my first job was a car wash. I was 16 years old. I worked at a car wash, communicating with people, learning how to talk to people, knocking on a window saying, hey, do you need me to do this, do that? It all goes back to like learning these small soft skills that eventually later on turn into something, on a larger scale. And a lot of times we don't look at that stuff as it's happening, or a 16-year-old kid, but it's really important to think about those little perspectives. In real estate, for me, and Rafa, you and I have talked about this before, it's one of the most, it's so communal in the aspect that people feed into each other. There's deals that I'm going to pass to Onaje, and it's very, I go to these real estate meetups, and I'll just have people that are bringing deals to the table or having conversation. We're able to have, a friendship that's built, and 6 months down the line, here we are with the contractor that I was able to connect with. It's one of those industries that it's so connected to people. It's like you can't do it by yourself.
No, you can't.
You just can't.
You got to build a team. You got to have a team.
Yeah, and a team can be relationships. It doesn't even have to be like an actual team that's somebody in the back with a hammer working, right? It's relationships, and that is something that's so important when it comes to real estate. And you could be working at Starbucks and just having the same guy that goes through there every day, and you just say, hey, what's that hammer in your back, in the back of your car? And then that's how that conversation starts.
Yeah, my strongest team isn't my contractors or my realtor or my lenders. It's my advisors. It's the people that I have around me that I can text and call and say, hey, in this scenario, what would you do? Or how do you think about this, or whatever? I mean, those are the strongest teammates. In my mind, it's the people that I can pick up the phone and they're going to answer and can get an answer from me really, really quickly. I mean, that is strength of relationships in real estate.
Yeah, that's huge, man. I gotta hear you gotta tell your story, because obviously we're big on short-term rentals, and we know that you have I know that you have the short-term rentals coming. So obviously the listeners don't know, but let's talk about your short-term rental journey that's coming up.
Yeah, it's been a long journey. So, believe it or not, Rafa, I've learned about short-term rentals 5 or 6 years ago, but I did not have the network of people that are doing it the way you and Jesse are doing it. I had people that was doing one or twosies, and based on the scale of business that I had, it was like our business is built on long-term rental. Like, that's the software we have. Those are the systems that we have in place, et cetera, et cetera. So I've been really planning on getting in this for a long time, and I really credit you and Clubhouse and just meeting people like you for me to just jump out there. So last year, we wanted to jump out there from two perspectives. One from true luxury, like single family type of luxury vacation type of rental, and then the other one based on my wheelhouses, which is multifamily. And so we look for deals. I don't just go search one thing. I put a wide net. So we came across an 8-plex, a little bit overpriced, but the location was phenomenal. And I'm a multiple exit strategy guy. So I just can't be like, oh, I'm going to buy this based on short-term rentals. I have to underwrite it for long-term rental as well, because I'm a long-term buy and hold, right? So my goal is to hold the property long-term. And matter of fact, if I look at my pro forma, if I'm just able to do short-term rentals for 3 years on this deal, it's a phenomenal deal. And so we got an Aplex for $700,000. Instead of I burned my way up, so I had some cash to put down from previous cash out refinances, and that's kind of where I got my down payment from. We did a seller kickback, because in commercial you don't have a floor there, so I asked the seller for about $60,000 back to go towards my down payment, so that reduced my down payment. So the purchase price was still $700, but all intents and purposes, the seller only got $640. Okay. And that's other $60,000. That's a whole acquisition strategy.
Another great creative finance acquisition story.
Yeah, that's a deal. But I do those all the time. My wife is a realtor. Because she's a realtor, we can get paid that way as well. But one way, when we really want a property, I ask her to waive her commission. And that's a great way for us to actually secure the deal. So that's another gem for y'all out there trying to acquire property or whatever. We're able to get properties that other people can't get because the realtor makes more money with us. Does that make sense? Not the buyer, not the seller necessarily. So we got this property, 8-unit complex, all 1 bedroom, 1 baths. It's kind of a stackable style. So 4 up, 4 on the bottom, 4 on the top. Our initial plan right now, and everything is in flux. So it's a BRRRR strategy deal. So we bought it. It needs a lot of work. Probably going to end up putting somewhere around $175,000 into it, which is more than I've ever put in a property in the shortest amount of time that I've ever put in a property. So even my 21 unit, I don't think I spent $175,000, and I did that over 2 years versus like 6 months. So this is like a really interesting time for me as far as that goes. And we're able to do some upgrades and some things that me and you talked about that maybe geared towards short-term rental that I normally would not put in the property, like the Ring doorbells on each unit, things like that. I can kind of hardwire. I can do a lot of things with electrical around moving things around. So we're doing that to tailor to short-term rental, but also knowing that long-term, I might have to move this to a long-term rental.
Right.
So 4 of the units on the bottom will be theme based. We're not 100% like sold as far as what they are, but we pretty much got a good idea of the 4 themes that we'll use on the bottom, and then the 4 on the top we're going to try to target to long-term guests, so to speak, those 30-day, 60-day rentals. So I look to employ both of you guys as core strategies on this unit. The 4 on the top being the long-term guests, because our experience in multifamily teaches us that, okay, if somebody's staying there long term, like, you don't want people in and out running over the ceiling on top of their heads and things of that nature or whatever. So we have a lot of experience on managing the property that way, and hope to lean on that, and hope to lean on my great relationships.
Yeah, man. I mean, obviously I'll help you as much as I can, right? Long term, I want to clear that up really quick, because when we say long term, people think long term, right? Years. You're talking midterm, right? Like 30 days, 60 days.
Correct.
Yeah. Yeah, man, that's awesome. I'm excited for you. I mean, I've seen the property. I know the potential there. The location is, you're right, awesome. I think it's gonna do awesome, dude. I'm super excited for you to get it going. I talk about it all the time.
Yeah, I'm really excited about it because, well, one, I just can't wait to see the cash flow. That's where I'm at now. I'm like, I gotta stop, because all in, I mean, I think we'll probably have about 300 into the property, like, before, like, when it's all said and done. But I'm not worried about it. Just like, well, that's a gang of money. I ain't got that kind of money. Again, I'm a BRRRR strategy guy, right? So, you put that kind of money into it. I already have an after appraisal value. Like, the appraisal gave us 2 values. Like, what is it worth today, and what is it going to be worth based on a long-term rent strategy? And I already have an appraisal, the after appraisal, at 1.2 mil. So we bought it for 700. Yeah. We already have the after appraisal value at 1.2. And so that's an appraisal not even based on short-term rental. That's just literally based on a long-term rental strategy. Yeah. So I feel pretty good about being able to extract my money out in a shorter period of time.
That's awesome.
Yeah. Man. You brought something up, Onaje, diversification. You talked about you have the multi units. You're going to be doing short-term rentals and midterm. I'm huge on a hybrid model. Like, I think that's the most important thing, because you're able to, like, keep somebody in there. You get the cash flow of a midterm, say a traveling nurse that's in there for 90 days at a time. And then you have the short term, which you capitalize during the summer. And you could eventually even switch that over during slow season and just get all nurses in there. So you're able to like have multiple different, streams of income based on the clientele that you have, which is
And-
one of the
Seriously, I
reasons
get
why I
excited
love
about that.
And to even get further, because we don't really go into this because this is more short-term rental podcast, we still have 30 other units that are long-term, and maybe only 2 of those we will convert over to short-term. So I still have that backed up from a diversity perspective with a lot of government assistance properties and things of that nature. So we're able to take this chance because I think we got, 17 tenants on government assistance, and say whatever you want to say about it, but the check come on the first. So that kind of helps us as long have that stronger backbone. Now, eventually we might divest of that, but as of now, that's a way for us to continue to scale.
Yeah. I think that's a fantastic strategy. Not only that, we just talked about luxury too. This luxury market with short-term rentals is highly profitable. There's a lot more. You have to have a lot more risk involved with it, but if you do it right, there's no reason why you shouldn't be making 10, 15K a month easily. I'm seeing it all over the place, even in places you would never even think about.
I'm not even in the game that hard, but I'm looking at this and I'm saying to myself, okay, so I just spent $700 on a eightplex, which is great, right? But I also could spend $500 or $600 on a luxury type of cabin in the woods on a lake type of situation. You can get that all over America and maybe make the same amount of money, right? Because
if not more.
So I want to play in both of those spaces. And as a long-term landlord, I can tell you right now, if you tell me I can get one property to make the same as 8, most people will take the 8. I'm gonna take the 1. Like, but that's because that's just my experiences over time. It's like, okay, give me 1 headache versus 8. So that's our pursuit going forward.
Yeah. You brought something up too, cabin in the woods where people are going. Like, I just bought a $500,000 house in Modesto and got a booking for $11,000. It's going to be $400 a night. And this is just like it's not even a luxury property, but it's something that's different. It has like a California vibe to it. It has, most people are looking at, investors, and they're thinking like, I'm not going to go spend $500K on a property. Like, that's ridiculous. But for me, I'm like, we don't have this in my market, so I'm creating my own comp. There's not anything that's similar to what I'm doing. And guess what? The market's before I even listed it, I already got a booking for it. So the market is already telling me like, hey, you can do this. So you don't have to be, like the Smokies and, what is that place, Rafa, out in the Dunes area, Joshua Tree. You can make money out there too, but you can also make it in places that you would never think are possible to make money like that based on the portfolio of all the short-term rentals that are in that market. You create your own comp by going in there and starting a certain type of property that nobody else has. You create that. And I think that's where
solving problems, right? Solving problems.
Exactly.
There's a gap in the market. I identify the gap, right? And then you're able to go and you have the knowledge to go make money off of that. People ask me, and you're hitting on something really I think is important before we shut the show that I want people to hear again with what you just said, is that people ask me all the time, well, Najee, what's a good deal? I want a good deal. Can you help me find a good deal? A good deal is what you make of it, right? And do you have an exit strategy to make the cash flow that you want to make by your definition, right? That's a big one, right? So, okay, spending $500,000 may not be a deal in comparison to the retail demand market, but you have no intentions of competing with Susie Homemaker. I'll spend 20 grand more than Susie Homemaker because all she cares about the granite. You care about the location and experience because you know that you can make $11,000 on one booking. And I think that's a really important point.
It's fire, man. Sorry, just go ahead.
I was gonna say, plus I have an exit strategy because we all have to have an exit strategy. We got to be able to revert back to long-term rent somehow, some way. If for some reason the city says, just no more Airbnbs here, you guys are all SOL, sorry, no more. I have to be able to cover my costs. So I already know that I bought that $500,000 property. My mortgage is $2,400. I can already revert back to long-term rent, still make $300 or $400 off of it. So that's okay. Plus there's a garage that I'm turning into an ADU because the SB9 rule that just passed. So I'm going to spend another 50 grand and I can turn that property from a $500,000 property to now a $700,000 property, take some cash out, turn that into something else. Plus I'm cash flowing off of it. So there's multiple different ways to make money, and you don't have to have, I'm spending a little bit more, but still at the end of the day, is something that makes sense to me, and it doesn't make sense to all the investors. And you just said it yourself right now. It's got to make sense to you. And I think that's the luxury of short-term rentals, is that you could buy something on the market for $1 million, and people are doing this and making $15K off of it a month. Like literally, that's happening like all the time right now.
That's why we're converting our business over. To be frank with you, I mean, we're looking to increase our cash flow on our properties. Our yield on our properties is not nowhere near the yield that you guys are getting, right? And I'm looking at myself, because I went into a year and a half ago, I told myself, oh, well, I want 1,000 units one day. And the path that I was going down from a learning perspective, I could get there. Like, I know how to raise capital. I know how to buy multifamily properties in bunches and things of that nature. I know how to, and I have the people in my network. But then ultimately I had to realize to myself, is that really what I want to do? Do I want to what am I really trying to do? I'm actually trying to produce passive cash flow so I can have a sustainable life and my kids can have a sustainable life generationally. Well, that doesn't necessarily equate to 1,000. I also know that 1,000 is going to be a headache. So if I can turn that number to 50, right, and get the same amount of cash flow as 1,000, why wouldn't I do that? It's a lot shorter to get there. So no, I love the concept of short-term rentals, and we're exploring all types of short-term rentals, not just the traditional traveler. I know you guys focus on corporate. Corporate is great. For me, there's a lot of money in the infrastructure bill that can be acquired, whether that's using veterans and things of that nature. That's in our wheelhouse. Housing homeless veterans. We've got 4 or 5 that we put on. And that's an angle that we're looking into as well from for next year, just doing the whole per bed model. So, because for us, I mean, sooner or later we're gonna hone in on one segment, but we are building the infrastructure to be able to manage some different types of clientele.
Dude, I love it, because when people talk about short-term rentals, they think Airbnb, right? And it's not. There's a million things, right? Jesse does the nurses and the contracts. You're talking about veteran housing and even government housing and military contracts. I mean, there's a million different things, right? I want to go back before we do the final closing segment here on the show, but what you guys were talking about is what we were talking about in the very beginning, right? Is where you're going to everybody out there measures in how many doors you have. Oh, I want to have 1,000 doors by the time I'm 50. Or I started that way, right? I wanted to have 100 short-term rentals, arbitraging. Now I'm like, no, I don't even care. If I can get to 50, making the amount of money where I'm going to be good to where I want to get to in life, then who cares? I mean, I'm actually not even actively looking for units, because I'm so happy where I'm at right now with what I'm doing, that it's giving me the leeway and the freedom to do what I want and get into different avenues of investing, right? And it goes back to what you were saying, Onaje, right? You're like, oh, first I wanted to do 1,000 doors. Well, now you don't. You just want to get to a certain amount of revenue and certain amount of income to where you're good, to where your family good. You're not chasing the next Grant Cardone, right? You're not chasing the next, I don't know, who is trying to collect 500 properties. I talk to multifamily investors all the time. They're like, oh, I have 600 doors. That's cool.
How much cash flow do they have?
Exactly. I have 23, and they probably do 40% of your 600 are doing, right?
Yeah.
And my 23, 25, whatever I have now, I lose track, but they generate just as much revenue as a probably 100 unit complex, right?
No, they do. Yeah, they do.
Yeah. And it's like, well, it goes back to, because that's where I'm at. I don't care about chasing the next. I don't want to be the next person who has 100 units. I want to have the units that are going to make my life easier. If I make enough revenue to live the way I want, where I want to go,
it's your journey.
And I'm not chasing nobody, man. I love that. That's why I wanted to bring that back up, because you dropped that in the beginning, and I wanted to kind of end it there as well. With that, let's transition, man. I got to ask you, being that the show is the big break show, right? I got to say, like, tell us, what was your big break in life, whether it was financial, whether it was spiritual, whether it was personal, business, whatever, that got you to that either mindset shift or that spot in time where you're like, okay, now I realize that, whoa, right? That click in my brain where I'm now transitioning to something else. What was your big break?
Yeah. So, it goes back to, when we bought this first property and we didn't really know what we were doing. This is an old home. This home was built in 1960. All my friends are buying brand new construction out in the suburbs, right? And the home, I'm talking about green shag carpet, gold foil on the wall, wallpaper, plumbing messed up, electrical messed up, all that kind of mess. And this is our first property, right? And everyone around me told me we were crazy. right? We were crazy. Even my realtor was like, man, I don't know about this one, right? But we stuck to the formula that we did. And I told you how much, we were able to get 40,000 cash. And our big break was literally being disciplined, taking that 40. We were still kind of in the crisis, right? We bought a property that was listed for like 65 grand in a neighborhood I knew. I offered 40 cash because that's all I had, right? And they took it. And I spent 2.5 weeks and $1,800 at Home Depot with all 100% sweat equity at the time, because I had what I had, right? And 3 weeks later, we were able to rent that out for $850 a month with a $290 payment. And
That's awesome.
again, that's not all the big numbers, but that was our first passive cash flow, and that paid for more than my car note at the time. Like we were bringing in about $500 or whatever from that, 550, somewhere around there. And I was like, man, after a couple months of collecting those rent checks, I was like, oh, this is real. This is gonna work.
Wow. Yeah.
I am down. So I'm like, down
100%. I'm all in.
Give me more. So, and that's really was my starting point.
Yeah,
That's awesome.
Shifting the mindset change, that investor mode.
Yeah, you got to change here. You work on this first. Other things will come.
Yeah,
I love it, man.
Education before compensation. Don't forget that, Onaje. You said it from the very beginning. Education before compensation.
Absolutely. You got to get educated first. Change your mindset. Change the people that you got around you. That you don't want to leave people behind, but add some people that can bring value to where you're trying to get to. Bring value to them. I'm big about that. How can I help you? Sooner or later, it'll come back to you. I'm big about circle of life as well.
Oh, my next question was going to be, give us a quick piece of advice or an actionable step for the listeners that they can take and apply at the end of this episode. And you just gave something great, right?
Yeah. Provide value. If you don't know where to start and you want to connect with somebody, how can I help you? Right? Yep. Instead of, can you help me? Right? How can I help you? Blah, blah, blah. Right? And then over time, you get to know them, establish real concrete relationships. My best deals in life are the ones that people text and call me about, not the ones that I go hunt. And they're calling and texting me because they either, one, believe in me or know that I'm genuine, or I've helped them in the past and this is their way of paying it back to me. So I give that to people.
I love what you just said, because the reason I've able to get so many units right now is because of the relationships I've built. I'm not even
calling no more.
I just signed a lease last night on another unit. Like, to tell you guys are the first to hear it. And
Nice.
It came from this dude calling me going, hey, I got another unit. You want it? I'm like, dude, again, yes.
I guess, yeah.
And it's because it comes from the relationships. People are like, well, how come you don't get more units? Because I don't want to look. Because I'm lazy. Because I know that I've already put the infrastructure in the beginning. And now that units will come. They will come, right? It's a simple, hey, you got anything available? If I'm actively looking, it's not like I'm making phone calls anymore. I shoot a text message to my network. It's like, hey, you guys got any units? So you guys remember that 30-unit complex that I passed up on? I reached out to the owner again because I have a buddy of mine who wants to open more units. And I'm like, look, I'll help you find something. It's no more than shooting a text message. I sent a text message. Hey, man, what's up? How you doing? Hope the building's going well. I'm just asking, do you have any occupancy still in that, any vacancy still in that unit? I need about 10 units in the next month for me and a buddy who's getting into the short-term rental game who's interested. And 5 hours later, he's like, yeah, man, I do. Let's talk after the New Year's.
There you go.
That's it. I'm not taking over the entire complex, but I might be able to help someone else get some couple units. And it was because I happened to know that person because of the relationship that was built. Dude, Onaje, this was awesome, man. I appreciate you for being here.
Yeah, appreciate it, man. This was a lot of good value.
I appreciate the invite as always. Hey, guys, again, subscribe to the channel. Subscribe to The Big Break. Don't just watch the videos. Give these guys some subscriptions. Let's get the game.
Onaje, you hear it, man? Where can we find you at? Everybody listening to you right now, where can we?
Right now, they can find me at onaje10k.com. That will have a link to all of my social media channels. And you can kind of hit me. I'm big on IG. We're big on Facebook, Real Estate for the People. You can just hit the link in the Onaje10k. And I do a lot of lives and I kind of show people, construction. I talk a lot about construction and finance and crazy economics, inflation, and things like that. So I'm big about trying to stay ahead of the game and educate people on where the market is going so you can be more informed in your purchasing decisions.
I love going on your lives on Instagram, man. Every time I get the notification, I'm like, yep, let's go on, because you always drop some really good stuff. So yeah, man, again, thanks for being here. We really, really appreciate it. This was an awesome conversation. I know the listeners and the viewers are going to get some seriously good value, dude. So thanks again, man. I appreciate it.
Man. Thanks, Onaje. Appreciate it, man. This has been fantastic.
Thank you guys for the invite.